Welcome back. We're back for another episode of the StoneX Australian Cattle and Beef Market Report. My name's Ripley Atkinson, the Australian Livestock and Commodities Manager for StoneX, based here in Sydney. We're developing price risk management tools for the Australian beef industry to help the sector manage market and price volatility with our Australian cattle swap. We're brought to you by StoneX Group, a Nasdaq-listed global financial services network with 100 years of experience in global commodity markets. Remember that the trading of derivatives such as futures, options, and over-the-counter products or swaps may not be suitable for all investors. Derivatives trading involves substantial risk of loss, and you should be fully aware and understand the risks prior to trading. Past results are not necessarily indicative of future results. Today, on the 6th episode of our StoneX Australian Cattle and Beef Market Report, we're fortunate to have on Ryan Brown from Smithfield. Ryan's the Group Livestock Manager for Smithfield Cattle Company in Queensland. Ryan, thanks for joining us.
No, thanks, Ripley. It's a pleasure to be asked.
Mate, some people involved in the beef industry or the feedlot sector more specifically will know who you are, but others won't. Can you give us a bit of a rundown on yourself, your background and your role with Smithfield?
Yeah, sure. Thank you. So grew up in extensive ag, grazing properties, backgrounding and breeding operations. Had a short stint as a buyer, commission buying, and that was how I was exposed to Smithfield. Took a buying role with Smithfield around 15, 16 years ago. And mate, over time, that just as that business has grown pretty significantly over that time, I've moved a brief stint operationally and moved into what's now essentially just a customer relationship management role with meat companies.
Mate, unreal. And I thought to kick us off, I picked up three things from my perspective about the past fortnight on markets and where I'm sort of seeing things. The first one is certainly clearly the restocker interest in the market. You know, we're seeing weaners well over $4.50 this week already, and there was sort of smatterings of it last week. You can see how much the confidence and optimism's fired since that rain. Particularly with the oats crop in northern New South Wales, southern Queensland, I think's been a big contributor to that. The second thing for me really has just been the fact that feedlot grids haven't followed the market up as fast as sale yards. There's obviously a bit of spot filling there, which you'd be able to talk a lot more on, but it's only rising sort of in a more steady state, whereas the sale yards have been quite sharp. And I think that's it. That's clear indication of the fact that feedlots are pretty well booked forwards to the end of this month into early May. The last part of it for me is definitely the aspect of improved fertility and cattle performance in the northern herd this year because of the season these guys have had in the last fortnight, really 3 weeks. That's set them up for the year. And I think the fact that the season has been solid following this rain, we're going to, you're going to see some pretty good performance out of the cow herd with fertility rates and marking rates, which should flow into good numbers of cattle marketed in the second half of this year. What, from your perspective, where are you seeing things recently?
Yeah, well, I'd be reasonably aligned with your points. If I wanted to go through them one at a time, I suppose the current situation would be driven off. There's really good moisture profiles over a reasonable amount of country now. So a couple of significant weather events, logically is going to drive light cattle to go back into, it's an oats time of year. Plus you've got areas that are reasonably low stocking rates at the moment. That Western Queensland, or predominantly Western Queensland change from last week, that's going to create some areas, particularly around the fringes of the big volume of water, some lighter country that responds really well. There'd be some areas, southwest Queensland and northern New South Wales, that grow a lot of herbage, that country that winters really well, that provided there's enough money in those areas, that's going to be a big draw for a lot of lightweight cattle. And as you mentioned, there's reasonable moisture profiles for oats crops to go in. So makes logical sense that those light cattle will gain in a lot of value. The the feedlots, feedlots are probably in a slightly different situation. As you said, the situation we were in 3 weeks ago was that there was a lot of cattle wanting to move out of still out of drier areas through New South Wales, and a lot of cattle out of not pasture driven, but trying to exit out of central Queensland, cattle that have just reached a sale weight. That pressure hasn't actually gone away. So there is still a good, robust herd in Queensland, particularly in the central areas that didn't get covered by big rain in the last 10 days. That those cattle haven't actually gone anywhere. There's some logistical challenges in getting them moving straight away, but you're talking about a setback of a week to 10 days, not months of short numbers. So the spike in the yards is only covering very short-term gaps, and that summary is probably your summary point's probably fantastic for a Monday, but given we're already at a Wednesday, you can already see a sale yard price in just a generic crossbred feeder has actually come back again and reset back to a level it was at 2 weeks ago. So it's only been a matter of days, and we're able to get trucks moving again. There's cattle back on bitumen, and numbers are coming in again. So we shouldn't have an expectation that off those rainfall events that the market gets out of hand, if you like, or a heavy feeder gets out of hand at least. I acknowledge that it's put a lot of value back into light cattle, into grower cattle, and probably will have a bigger impact on heavy grass bodies that were, because we were in a situation where was actually starting to get quite scary for values had a big rate event not come through, with central Queensland firing, a little bit of New England starting, Northern Rivers sort of starting, and still some numbers coming out of Western New South Wales. Had we seen southwest, northwest Queensland move through May at the same time as those other areas were flowing, we were going to see a big reduction in big lines of feeders. So big cents per kilo reductions in those articles that have probably just slowing down that Western country probably just means we've found a bit of a bottom for the short term till June, July somewhere.
Yeah, and I think the conversations, there's a couple of points you made there. I think the conversations I'd had was a lot of relief with the fact that this rain did turn up. There seemingly was a lot of cattle starting to back up pretty quickly with numbers moving for the fact that, the first quarter of this year wasn't exactly red hot in terms of rainfall. Are you sharing similar sentiments? Like the rain came at a pretty important time that just gave the supply chain a bit of breathing room and relief?
Absolutely. This just spreads the numbers out a little bit. We had a lot of cattle to move through April and May without this rainfall event. So as I said, we had areas where it's rained that I don't think anybody was really accessing yet. There was a lot of conversations out of Western guys starting to have a lot of hard conversations, but the cattle weren't really moving yet. So this just spreads them out and means the supply chain can actually absorb them and they don't lose so much value.
Yeah, and I think from my lens as well, I think I'm very much similar to you in the fact that this sort of upside, this little upcycle in the market, I don't see it lasting all that long. I think we've got to look through the fact that, yes, the season is now going to be good for a lot of places, but we've purely just kicked the can down the road in my eyes in terms of supply. That those stock that might have gone this month are now delayed if they were spot cattle, but seemingly a lot of the feedlots have got a lot of cattle around them and are pretty well booked for numbers. And I think the fact that the returns on those shorter fed cattle are also favourable at the minute with grain prices and the market where it is, which I think is encouraging that continuation of making sure those feedlots are as full as we can get them.
Yep. So, I'd agree with that, only that I'd say whatever spike we see due to logistics, yes, will be short-lived, but I do think this serves to flatten the curve, so to speak, where we're not going to see the lows. We're not, there's probably 30, 40 cents in what's now the bottom is higher by 30 or 40 cents than it could have been had that cycle continued. So it's flattened the curve a little bit.
It's good though. I think we the market probably needed it, and particularly for the northern areas that hadn't probably had the wet season they wanted, where some big numbers can move quickly. I think it's everyone's pretty well appreciative of it. Are you guys still, you just mentioned Western New South Wales. You're still sourcing cattle, from regions that you thought might be running later than where they should have. Are there any sort of areas in the country at the minute where you've been surprised that the numbers are still coming from when you thought they might have pulled up?
Yeah, but if I went back to the position I took in December, I thought by February Dubbo South was finished, to be honest, and they're still not with the intensity that they're not coming with the intensity that they were, but I'm still accessing cattle out of those areas that I didn't think would be possible by now. Thought they were done.
And I think it speaks to the fact that there's probably more cattle about, if you're having that, not problem, but if you're seeing that, then I'm sure a lot of others are. It probably talks to the fact that we've got more numbers around us generally, not just north of Dubbo, but generally than we either care to realise or understand.
Well, mate, I think that's certainly the case for Queensland, and I suppose I can only really speak to Queensland as that's where I spend most of my time. But it is my belief that there is a lot more cattle out there than we give it credit for, and that mostly just comes off the back with. Like I think back to producer conversations over the last 10 years. Everybody's looking to produce a few more kilograms and maybe picking up some efficiencies to do so. I do think there's more numbers and higher conception rates and better calving rates than we give it credit for just at the moment.
And it leads me to a conversation that you and I have had before, and I don't necessarily, we're talking about cattle numbers at the minute, improved fertility and performance in the herd. Obviously, feedlots are pretty full. This is a conversation you and I have had a little bit, and it's not something I necessarily feel it gets the attention it deserves. Give us your views and the rundown on how you see processing capacity in Australia at the minute, and do you think it's adequate for the number of cattle we've got?
Yeah, so it's a difficult question to answer, and then you're right, and we've had this conversation a couple of times. I do have a concern from a producer point of view. I have a concern in the back of my mind that at some point in the next 5-10 years, with the herd, I believe is expanding and maybe not getting as much attention as it deserves, and with aging processing infrastructure, I do think we get to a point where we do not have the processing capacity, coupled with the fact that our bodies are getting heavier and we're constantly pushing to better quality lines and hanging bodies for longer and chilling for longer. I think all of that combines to create a situation where eventually we do not have the processing capacity to just chew through the numbers that are presented to us. With a lot of brands and processors pushing for more and more grain-fed lines they can program that aren't impacted seasonally. So higher percentage grain-fed, also pushing those carcass weights up. Eventually, I think we get to the point where we don't have the processor capacity we need, and that devalues a livestock article for a producer at some stage. So I do,
and puts pressure on price. You feel potentially, 5-10 years down the track if we come to this situation.
Yeah, logic tells me that if we've got a positive meat market, but we don't have the process capacity to process everybody as it becomes available, then the logical next step is that the livestock price moves down, regardless of what a meat market is doing.
I'd agree with that, definitely. And I think it's something that we probably don't touch on enough. And there has been examples, across the eastern seaboard into South Australia of plants that have invested and looked to make different adjustments or improvements and investments in their operations to handle those bigger bodies and carcasses. But generally, as you say, there's a lot of older infrastructure about that that's still operating and doing its job. But the points you make about the transition over the longer term towards more grain-fed centric system logically points to a bit of pressure at some stage. On that talking slaughter and production, I had a look through the slaughter numbers which we've basically gotten from MLA as of last week for the end of Q1, and they're telling us that we are well on the way to production, slaughter and production highs. My estimates, when you include the 26.3% for slaughter, difference between MLA and the ABS data, which is mandatorily reported, when you add that 26% on top of the 148,000 we're killing weekly at the minute, or 147,000 it was last week, it pushes our weekly numbers up above 180,000. And then when you extrapolate that out across the quarter, our Q1 figures will be the highest Q1 slaughter numbers since 2015, when we killed 9.1 million head of cattle. So we're well on the way, talking about those sort of volumes. We're not there yet, but the data that I've just looked at yesterday is telling me we're on track for it. And the same with production. You see production through carcass weights carcass weights are typically quite high in the first quarter of the year. And I think we'll definitely see that this year because of those cattle held back after the spring we had last year. And, generally the fact that the season was pretty good. So cattle were held for a longer period of time over that Christmas break for weight. If we assume a carcass weight at 312 kilos nationally, that'll put our Q1 production at another record and about 120,000 tonnes ahead of last year's result. And I think they're just some important things we've got to keep in our mind. Like, we're going to gradually, continually see this improvement and increase in slaughter throughput. The weekly data tells it, and I reckon we're going to see it again when that ABS data is released in about a month's time. It's on May the 20th, I'm pretty sure. But pretty interesting to see those figures aligning. We're telling ourselves we can't reach the highs 10 years ago, and the data's well on the way at a quarterly level to that happening.
Yeah, well, it'll be really good to see. Really good to see how long that can be sustained. Because it would be, it'd be reassuring to see us get back to those sort of levels.
And we think about last year, we killed 8.3 million. I think that surprised a lot of people. To get back to the 9 million, say, which I'm pretty sure was 15's number, and it was 9.26 for 14. 700,000 head sounds like a lot, but when you work it out across a calendar year or 40 to 45 working weeks without too many major disruptions, I do believe it's achievable. And I think when you look at the weekly data, our kill numbers are back up at March 15 levels on a weekly basis, or about 15,000 head lower than it already. So I'm confident we're going to get there. It just it'll be interesting to see what these ABS numbers show in a month. And on that, talking feedlots and just the change in the system, mate, you've been in the sector a long time. I had a look at grass-fed bullock kill numbers against grain-fed slaughter, which admittedly it doesn't decipher between sexes. So heifers are included in this kill rate. But you could see or in my eyes, the 2013 to 15 drought was a major turning point with the reduction in basically grass-fed bullock slaughter volumes and production, and the producers pivoted towards making themselves focus on the feeder system. Have you seen that? Is that something you've noticed over your time, working with clients, producers, and generally the supply chain? Is it something that you've experienced or seen?
Yeah, and you're right to note dry years, because it's not, in a lot of cases that I've seen, it's not really a conscious decision to change a business model. What I have seen happen a number of times is out of the better country, traditional grass-fed bullock producer might get to a point where season won't allow it, sell out this year's production as feeder steers rather than having them as next year's sale of grass-fed bullocks. And what that does to cash flow is simply mean that you can never get back. You can never skip 2 years worth of production to grow your way back into that grass-fed bullock. It's incredibly difficult to do. To give away your income or such a big percentage of your income to get back into your traditional model once you've had to sell out early. Also, there's been such a significant increase in value of that feeder steer as the feedlot industry's expanded. Just making it a more economical model in most areas where the time and cost it takes you to get from that 450 to a 600 kilo steer for a processor weight is it's a pretty significant investment. Added to that, as I said, the cash flow issues with just funding that just means it's really difficult to ever get back onto the right foot to be a grass-fed bullock producer once you've stepped out of it for a period.
Yeah, and I suppose you tie cash flow into the fact that just generally the cost of doing business is so much higher than what it was 10 years ago. It can add up pretty quickly on pressure, particularly if you're highly leveraged and the banks wanting to come after you. If there's the ability to carry more cows, for example, more productive cows at that matter nowadays, and turn them off at lighter weights, the outcomes, you're generating more income to service that debt, which I think is important. Mate, you've been in the sector a long time. This is just a more broader structural question, but interested to see probably your views on the biggest changes in your career involved in the beef industry and Smithfield and lot feeding. It can be a couple of things, it can be one, but just interested to see what you think's been the biggest change in your time.
Well, the constant one. So from a feedlot sector perspective, it's been the expansion. Like if I go back to when I first started selling grain-fed bullocks, life was actually pretty easy. If you didn't like the price offered on a back-to-back contract on forward money offered, you just didn't sell, and you knew that the processor needed them to service a brand down the track, so you sold them at 60 days on feed when everybody shortened up. These days, there's a lot more cattle on feed than there are grain-fed beef brands, so you can't really hold your numbers to ransom anymore. You've got to do a lot more work on the strength of the relationship as opposed to ransoming your numbers, as I said. So that expansion has kind of changed the way I've viewed customer relationships over time, or just the increase in competition has changed the way I sort of marketed cattle over the years. Aside from that, feedlots, but beef industry as a whole, whether it's my personal experience or whether it's a change that's occurred, but just the adoption of technology and the use of data has been incredible. So I came from an extensive background, I suppose, that wasn't recording a lot of information. Early in my career, no information recorded. It was all assessments made were very subjective, and really there was a lot more art than science in the industry. And just our ability these days, even just in the last 2 years with the improvements in connectivity, like Starlink itself has driven awesome efficiencies just with our ability to have live data. And that adoption of technology and the ability to record and analyze information has driven incredible efficiencies. We're making improvements all the time based off live data and animal performance.
And I suppose we know it's moving at such a rate now. In 5 years, it'll be different again. It's such a meteoric change. It's moving so quickly, isn't it?
Yeah, it's incredible. And the work you actually have to do now to keep up is it's a lot harder to be competitive today than it was not so many years ago. Like you just have to know a hell of a lot more these days when it gets into the branded programs and the genetic lines and how they can perform against another. It's the depth of knowledge you have to have now to be competitive is just staggering.
Yeah, I think and I'm just thinking while you're talking, competition, is in my eyes is good. It breeds better performance in people, that they're intentionally trying to push themselves to do a better job. And ultimately, 70 to 75% of whatever we're producing, whether it's grass or grains, irrelevant, it's going to end up on someone else's plate around the world. And if we're making each other better every day or ourselves as individuals to be competitive, I think that's only a good outcome for the beef industry in the long term.
Absolutely.
Mate, anything else you'd like to share?
No, I don't think so, Ripley. I think there's a whole lot of things you can go into and start talking about demand and meat programs and meat values. But I think the most important thing driving a livestock price is always that the processor capacity and actual supply. So, supply has a much greater weight in a livestock price than actual meat demand does. So, we could go on and talk about a US situation that's continually unfolding, and but honestly, I think meat has a much lower impact on an actual livestock price than availability of livestock does. So it's I think we've probably covered the most important parts of it.
Yeah, and on your point, Brian, I wholeheartedly agree. I think Australia's livestock market and its cattle price is fundamentally driven by supply and demand. Throw the weather in there, which is a major contributor. I am certainly on your page with that line of thinking. I think that'll wrap us up for today. Thank you for your time, mate. We really appreciate your insights and making the time for us. Unreal to have you on. And cheers.
No worries. Thank you, Ripley.
Questions are always welcome. So if this episode or any others have raised any for you guys as listeners, let me know. Send me an email to ripley.atkinson@stonex.com or record a voice note of yourself, where you're from and the question, and we'll answer it in the next episode. Thanks for listening today. We'll be back into markets in a fortnight's time. Take care, look after yourselves, and we'll see you then. Cheers.